The stock market can be a challenging place to work in, especially if you're a beginner and have limited or no experience in the area. If you're just getting started in this area of business, you need to know about the top 10 tips for trading beginners. Educate yourself. The more you know about your finances and investments, the better prepared you will be to face market turmoil. If you're a complete beginner when it comes to trading, learn as much as you can about how stock markets work. Read books and blogs written by experienced traders. Take online courses. Watch webinars. The more educated you are on financial matters, the easier it will be to ride out turbulence and make wise investment decisions in times of stress. Understand the risks. If you're trading, you need to be realistic about potential losses and rewards. If you're not prepared to lose your money, then don't invest. Always get financial advice before you invest. There are many people out there who claim they can make money but have never traded before and will try to sell you a trading robot that doesn't work or is expensive. Start with a small account. One of the most common mistakes traders make is starting with a large account and trading without any risk management. This usually leads to losing much more money than necessary, which can have a serious impact on your mental health. Keep it simple. Look at different trading strategies and decide what suits you best. Learn about the ins and outs of your chosen strategy so you can teach it to others. Do as many backtests as possible before opening your account with real money. Manage your emotions. It's so easy to get carried away with trading, especially if you're making money. Just remember that the markets are unpredictable and what goes up can go down. Always try to keep your emotions under control. Stay grounded and make sure you have a plan before you enter any trade. It's also important not to let your losses get you down. Take them as lessons learned. You'll be surprised at how quickly they'll turn into profits when you have the right mindset. Creating an account. The first thing you want to do is open a trading account at your chosen brokerage firm. You'll need to verify your identity and provide information about the type of account you want to trade with, as well as how much money you have available. Once you've created an account, it's time to start investing money and buying stocks. Some people like to buy stocks individually. Others prefer to invest in mutual funds or ETFs. Get out of trading when you're down more than X%. You should only trade the amount of money you can afford to lose. Set a stop loss that is less than that amount, so if you get too far down, you will be able to cut your losses and move on. Start trading with X amount of money. $1 per point is enough to start trading stocks, as long as they are priced around $20 or more. Take notes and review them regularly. Develop a trading plan that takes into account your risk profile, goals, and time horizon. Do your research on the company you want to invest in, its competitors, and the sector it operates in. Understand how a company's stock is valued by reading about a company's P/E ratio, price to earnings ratio. Diversify your portfolio across different stocks to minimize the risk of losses if one investment fails or underperforms. Set attainable goals. No one can predict the future, but there are some things you can do today to get a head start on your trading goals. This is why it's important to set attainable goals and track your progress every day. Keep tabs of what you did well and what needs improvement. The journey doesn't end here. There's always more to learn. Know when to stop trading. It's always tempting to continue trading even when things are looking bleak, but it's important to know when it's time to stop. If you're not making any money or you can't afford the loss, then it may be time to quit. Remember that losses are a part of trading and you will have them from time to time. Thanks for watching to Tips for Everyone. Don't forget to subscribe. Give a thumbs up and let us know what other tips you would like to get in the next video.